You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim. How are you doing today?
I'm doing great, as usual. We're taking a look at what's happening in the precious metals market. And right now, you said it's just like it's head cold season. A lot of congestion going on where prices are bouncing up and down, but pretty well in about the same range.
Yeah, you know, there are only three ways that prices can go of anything, a commodity, a stock, whatever, and that is up or down or sideways. And up or down, if it's a regular trend that's going on, that's what we call a trend run, where it goes in the same direction for quite a while. That's what we always seek, because that's where you can make a lot of money if you're on the right side of that. But that's about 25 or 30% of the time that prices do that. Most of the time, as much as 70 or 75% of the time, prices trade within sometimes a very broad range, and they can do that for months or even years. And this is where people get into trouble. They lose money, they lose their focus, because they try to be involved too much and kind of guess where things are going rather than to let the market give them some substantial clues. So, for example, silver might be up 30 cents today, and people are going, oh, they just read a positive article on silver going higher, and so they start buying. But if they looked at the charts, they would see that silver is in a well-defined area that's boundary by, over the intermediate term, defined as a few months, about $32, $33, $35 on the upside, and 30, 28, and 26 on the downside from a technical perspective. And so if you look at this, you'll say, well, 30 cents is interesting, but it doesn't tell me anything right now because it hasn't penetrated either one of those upper or lower boundary areas.
After you take a look at the numbers then, what should you do?
Well, a lot of times it's best not to do anything. First of all, the presumption is that people have a core position, which they're not going to touch in any regard, because as long as they believe the bull market's still going, they hang on to it. The other thing is, do you want to do light selling of your trading positions into the resistance area? Do you want to do light buying of your trading positions, or even adding to core in support? And if you want to do that, then you wait till those areas get pretty close to being hit and you do something. But in the vast middle wasteland area, so to speak, where prices are going back and forth with no discernible trend, sometimes it's best to either just watch in a relaxed manner, or simply turn off the computer and maybe go fishing for a while.
If gold or silver hits what you call the breakout price, you're saying about $1,800 for gold, perhaps $50 for silver, is that a time to jump in there if you see those marks about to be reached?
Well, it can be, and the thing to remember is that there's always a price to pay for whatever action you take. For example, if you jump right in and it's coming up to the boundary, a lot of times you're going to be disappointed. If you're right, you can make some pretty good money if it takes off and breaks through the top. But if you're not, you're going to be frustrated, and this is what happens to so many people. They don't wait for the evidence to start accumulating. On the other hand, occasionally there are breakouts that are runaway markets, but those are pretty rare. And what David Morgan recommends for people that want to kind of control their risk is to wait for 2 or 3 days of a close above a major resistance area and then take the position. Or you could take a small position and then add to it. But a lot of times you'll get these fake out breaks up or down where the price is real strong in the middle of the day and then closes back down into the area below the resistance. And so if you wait for a couple of daily closes above that, then that gives you greater confidence that, yes, a new trend, a new intermediate uptrend may be developing.
I think perhaps the sale of one company could make a difference like that on the market, but if it's just one company, that isn't an overall trend.
That's an excellent observation on your part, Jim. Let's say that the market has closed 1 or 2 days up above resistance, and we wonder if this is valid. You could go back and say, is this due to a couple of overweight companies in an indice, or are the other companies following along? Maybe your favorites, maybe the bellwether companies that you see tend to lead these things. Are they confirming that newer higher price, let's say if it's silver or if it's gold? But if these companies that you follow, that you feel are the kind of the lead horses in the race, if they're not doing anything or if they're actually getting weaker, then you might want to hold off and see if this is the real deal.
So, of course, those companies are highly valued in the long term, but people, as you were saying, were kind of shorting them over the last couple of years, saying, well, we don't care if you're the biggest gold producer in the world. We're still not going to invest with you because we don't think you have, a short-term gain to be made. You're not going to go and put all your money into that.
That's true, and and we've talked about this several times in the last 6 months or so, but mining companies as a group have been undervalued in relationship to the movement of the metals for the last 2 or 3 years. And this is, due to a variety of factors, but the point being, that's the way it is, and so you have to, put that into your calculus when you're looking at these things. But if you wait for, the more confirmation you wait for, the more possibility that you'll miss a certain amount of the gains. There's a saying that, if it's in the news, it's in the price. So if you're reading news about things that's very positive about the price, chances are prices have reflected a lot of that. So really it's not about having no risk on a trade, and a lot of people want that. They want to do a trade where they don't risk anything, but they make a lot. And it's just not that way. So it's a question of how you manage those twin situations of risk and reward, and you have to accept a certain amount of risk for what you perceive to be a greater reward. But if you're not willing to accept any risk, or if you throw caution to the wind, either way, that's not a good deal.
And we have to be aware as well that several companies, big producers of precious metals, have been withholding a lot of what they've produced. So that could make a big difference too. Just when you think we've hit that breakout price, they could flood the market with a lot of physical material.
Well, it's possible, but I'll tell you, I think that just from what I've observed, not too many companies are holding back their production. A lot of them can't afford to do it. They need that cash flow. So I do think that the ones that are doing it, and we talked about a couple of them last week that were, I think that this can be a very productive thing if it's handled positively. But the supply-demand situation is so much larger than even a few companies that I think that would be a minor consideration, but it's something to think about.
We're 2 weeks off now from the elections taking place. Stability in the White House and the big fiscal cliff the U.S. is facing. Bills need to be paid, and are they going to get that organized? Also, a change in the leadership in China, although I understand the old guard is standing right there next to the new guys, so there's probably not much of a change in their policies either. Have we seen anything in the markets that reflects that?
We've seen so many things that, and all this is subjective because no one has a crystal ball, but you mentioned the changing of the guard in China, and we don't know how that's going to play out, whether the old guard will continue to, reassert itself as it did several decades ago, or whether the policies of continuing economic growth and trying to spread the wealth out will assert themselves. And chances are you'll have a little bit of both. But people are still looking at Europe, which has a very weak setup going forward financially and economically. In the United States, there's a lot of question marks. So I think there's just a lot of questions overhanging the market in general. And it's way beyond you or I to speculate what all those mean and parcel them out. But I think we can get so frustrated if we try to figure them out because it's beyond us to figure out right now. But the price eventually will let us know what its conclusion is. Mr. Market will tell us in a big way, one way or the other. And we hope it's on the upside for our metals prices and our miners, but we don't know. And we don't know when that'll be. We hope it's real soon, but it could be several months out, or it could be taking place right now. But at some point, it'll become pretty clear to us. And sometimes doing less rather than more will be better for our financial and psychological health.
Yeah, and we talk about a change in leadership in China. One thing China's looking at is ending their one child per family policy because they say in the future they're facing a labor shortage. Hard to believe that in the most populous nation in the world. And that's the kind of look ahead or forecasting they do, is they don't plan for the next 3 months. They plan for the next 30 years.
Right, and their one-child policy has had some benefits, but it's been very devastating because it's estimated that for every 100 women of eligible marriage age, there are about 80 men. So there's a real disproportionate gender situation there. Not to mention the demographics. The labor pool, as you mentioned, isn't as large as they need it to be because a lot of people are growing older. The demographics aren't as bad as some places in Europe or Japan, but they're not real positive either. So The irony is that they have a lot of people in that country, and they're trying to limit the population, but the one-child policy didn't work as well as they thought, and now if they do go away from that, as you said, the population is going to increase, and hopefully they can handle that because it'll be a bigger issue in terms of social issues and things like that. So I guess there's no easy solution for them, but the Chinese society, as you know, is very dynamic, and they certainly look at the big picture, as you say, looking out decades and even centuries rather than just for the next election.
Well, they don't have to spend all those billions getting reelected.
That's true. They save a lot of money there. The United States went through, what was it, $6 or $7 billion, and it really didn't change much. So maybe next time, maybe we could have a lot less advertisements and maybe just have a few fireside chats and save a lot of money for the whole culture.
Yeah, I just wonder, what kind of an impact that money would have had it been spent on something more useful than posters and TV time.
I read about a woman, and I can't remember what state it was in. I think she was running for senator or maybe just representative, but I guess she spent $100 million of her own money and lost. And I got to tell you, even if you really have a thirst for politics, that's a lot of money to throw down the drain. Just think what good that could have done in terms of being spent on people or projects locally for her people, even if they weren't her constituents, at least her neighbors. So everybody to their own devices, but for me, I'd hate to waste that much money on politics, frankly.
Yeah, or $100 million, that's what Mitt Romney calls lunch money.
Right. So fortunately, we're through with the political process in terms of who gets what for now, and we can just sit back and see what happens, but it's been pretty frustrating and also fascinating for sure.
I was going to say, I bet you every American, no matter of which political stripe, hopes that they can roll up their sleeves and do some real work instead of sling mud at each other.
I think it's time for that. I think we have a real political fatigue here, and I notice in Canada it doesn't seem to get to that point. So you guys are a little bit more laid back than we are, and that's a good thing.
The election campaigns are limited in time before you can start rolling out the major ads. It's like a month and a half.
Right. So what I'm going to do is watch those big boundaries that we've talked about of silver to see what happens. And in gold, it's around $1,800 on the upside and around $1,550 on the lower side. So if those areas get penetrated one way or the other, that will give us some pretty big clues as to where the major direction for gold will be. And I'm very excited to watch this in a calm manner, but if we get a penetration, I hope on the upside, and the odds are that will be the case by about 60-40, then we're going to have some pretty interesting fireworks, I think.
My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com.